Hey, Bunny fam! Let's dive into today's top tech and crypto updates together. Important update from the Worldcoin front. Looks like they're making a strategic hop away from Europe and more toward Asia Pacific and Latin American markets. Fabian Bodensteiner, their managing director for Europe, says they're seeing more promising opportunities in regions where governments are more tech-friendly. The project has had a bit of a rough burrow in Europe. German data protection authorities have been investigating their iris scanning tech since July 2023, and both Spain and Portugal temporarily paused their operations over data concerns. But they're not abandoning the European warren entirely. They've successfully launched in Poland and Austria, and they're still committed to working with European regulators. As Bodensteiner puts it, they don't just want to leave Europe and dodge things. Their focus now is on markets like Japan, Malaysia, and Argentina, where they're collaborating with game publishers and government platforms. In Malaysia, they're even working with the National Research Center, MIMOS, and the e-government services app, MyEG. With limited resources and a world of opportunities, sometimes you have to focus on the most promising markets. Interesting news from the crypto adoption front. Matrixport just dropped some compelling data showing that crypto's hopping into the mainstream, with 7.51% of the world's population now using digital currencies. They're expecting this number to jump over 8% by 2025. What's driving this growth? Two big things: institutional players and economic uncertainty. Big names like BlackRock are helping legitimize the space, while Bitcoin's increasingly seen as a safe burrow during economic storms. As Marcus Thielen from 10x Research points out, Bitcoin's price tends to rally whenever new institutional products emerge in the market. With potential Bitcoin spot ETF options on the horizon, we might see another wave of institutional interest. But it's not all sunshine in the crypto garden. We've still got some challenges to navigate: regulatory hurdles, market volatility, and those pesky security concerns could still make things bumpy. Still, with 7.51% global adoption, it looks like crypto's definitely outgrowing its niche burrow. Lastly, after 3 weeks of major inflows, we're talking almost $2 billion, the market took a little hop backward last week with $147 million in outflows. James Butterfill from CoinShares points to strong economic data as the culprit. Looks like those anticipated rate cuts might not be hopping our way as soon as expected. Here's how the numbers stack up. Bitcoin led the outflows of $159 million, while Ethereum continued its downward path with $28.9 million heading out the door. But there's a bright spot. Multi-asset products have been steadily attracting investors for 16 weeks straight, with another $29 million coming in last week. Geographically, it's quite the mixed burrow. The US saw 209 million hop away, while Canada and Switzerland showed some bullish spirit with inflows of 43 million and 35 million respectively. Speaking of Switzerland, they're really establishing themselves as crypto's second largest investment warren. And that's your NerdBunny news for today. Stay tuned for more updates and keep hopping ahead. Don't forget to like, share, and subscribe for the latest updates.